Hello everyone. So I just want to continue with the strategy I was teaching the previous day, just for the purpose of clarity. So like I said, the strategy is very simple because it's as simple as as anything you can imagine. So all you need to do, any currency pair you want to place a trade on, you straight go to the daily time frame to just see the overall trend of the market. The first thing you need to do is to locate the trend of the market. That's the first thing you need to do, is to locate the overall trend of the market. To locate the overall trend of the market. So if you go far left, okay, you can see the market was let me see, let me shrink it. Okay, let me expand it. Okay, make it normal. Okay, you can see obviously from here, long time, that the market is on uptrend. But then let's validate our claim by drawing this trend line. This is the origin of the trend. So all we need is two trough. All we need is two trough. All we need is two trough in order to draw this trend line on daily time frame. Though the major time frame we need is the 4 hour time frame, 1 hour time frame, and then 15 minutes for entry. But then I always want to check the daily time frame because it gives me the overall direction of the market. And like I said, for us to draw a trend line, an uptrend, we need just two trough. We need two trough. So this is the first trough, which is also referred to as the origin of the market, and this is the second trough. Then voila, perfect. This is a perfect uptrend. But you can see from the daily time frame that the market broke here, retest, and then is going down aggressively. So just this one is just to give us the overall trend of the market. We are really not interested in it like that, but it's just to help us give us the overall trend of the market. And as usual, like I always said, market structure is key. So you can see this is what? This is lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. It requires a lot of practice because the market is not actually perfect. Lower low, lower high, lower low, lower high, lower low, lower high, and you can see lower low, you know. So so you can see lower high, lower low. And now you can see that the market is changing structure because as long as the market did not take away the last high, then we can conclude that the market is trying to change structure. And this is the highest. This is the recent high. And we are expecting that if the market should continue the uptrend, it should be able to do what? To take away or to take out this particular highest, the highest level it has attended. But you can see it forms higher high, higher low, and start forming lower low, lower high, lower low. This is lower high, lower low, and it's trying to form lower low, lower high, continue lower low like that. So we can obviously see that the market has beginning to change structure. But then we can't conclude until this particular one is formed, because the market can come aggressively and take away this one. The market come aggressively here. This is lower low. The market can come aggressively and take away here and continue with the uptrend. You know, so for us to be sure, it has to form lower high, lower low, lower high, lower low at least twice. Now it has beginning to it forms lower low, lower high, lower low, lower high. By the time it forms lower low, lower high twice, then we can conclude that the market is has completely changed trend. I hope we are following. So it's as simple as that. It's as simple as that. So we can see that on the daily time frame, the market has broken the trend line, retest, and is aggressively going uh, down. So, like I said, the major important time frame for us for our analysis is 4 hour, 1 hour, and 15 minutes for time frame. But the reason why I normally check the daily time frame is to give me the overall trend of the market, just like that. So let's proceed to 4 hour time frame. 4 hour time frame. So you can see that the market is actually going down. The market is actually going down. We can draw a trend line from here. The market is going down. We can draw a trend line from here. Can draw a trend line from here. Very perfect trend line, indicating that the market is going downward. And for drawing trend line in a downtrend market, we need just two peak. Just two peak. We only need just two peak. So this one is considered as the origin of the trend. That's the first peak, and this one is the second peak. This is the second peak. So you can see the market comes down, retrace a bit, coming down, and possibly trying to retrace. So the market may touch this trend line and then continue the downward movement. So overall, on 4 hour time frame, the market is uh, on a downtrend position. So let's go and check 1 hour time frame. You know, the essence of going through all this time frame, the 4 hour daily, 4 hour, 1 hour, is to ensure that the market is actually in agreement with all this time frame. If we check daily time frame and the market is going down, just like what we saw on daily time frame, the market has broken the trend line, retraced, and is going down aggressively. And then we confirm it from 4 hour time frame, and 4 hour time frame indicate that the market is actually going down. And then we went down to 1 hour time frame. The market is also showing that is on a downtrend movement. Is on a downtrend movement. In fact, we can draw a trend line from the 1 hour time frame too. Can draw a trend line. This is considered as the origin on the 1 hour time frame. So we can draw a trend line from here. We just need two peak. In downtrend market, we only need two peak. We only need two peak to draw a perfect downtrend, to draw a perfect trend line on a downtrend market. We only need two peak. Two peak. Perfect. So you can see. So from the 1 hour time frame, this is considered as the origin of the of the trend. So this is the first peak on the 1 hour time frame. This is the second peak on the 1 hour time frame, and this is the third peak on the 1 hour time frame. So a daily time frame, 4 hour time frame, and 1 hour time frame, they are all in synchrony with each other. So now we'll go to 15 minutes time frame to position carefully and place our trade. Now the strategy is called ACC. A stand for aggressive move, C stand for correctional move, and the second C stand for continuation move. And this is a downtrend market. This is a downtrend market. So the downtrend market, we are looking for aggressive move, correctional move, and then continuation move. So from here, we can say that our aggressive move is this one. All this one is considered as our aggressive move. This aggressive move from there down to here is considered as the aggressive move. So we'll be targeting this level. We'll be targeting this level. We'll be targeting this level. So because this one is considered as our aggressive move, this one is considered as our aggressive move. So this is the correctional move. This is the correctional move. And we are going to place our trend here because our major concern is the continuation. So we only place our trade around the continuation. So aggressive move, we wait for aggressive move to complete, then we wait for correctional move, then we now place our trade along the direction of the continuation move. As the market moved aggressively down here and it stops here and it corrected itself, it is expected that the market will come down because the market is actually on a downtrend movement. So this is as simple as ABCD, like I said earlier. So this is the aggressive move, this is correctional move, and we are expecting continuation move. So the continuation move now is one we are going to place our trade. So this is where we are going to place our trade. This is where we are going to place our trade. So we are placing our trade here, and then we are targeting this level. And you can see there's another confluences apart from the downtrend. It's trying to form what we call double top. This is first leg, second leg. It's trying to form M pattern. M pattern. So we have double confirmation. We have the market is going downtrend, and again the market is trying to form what? Double top. That's M pattern. Another confirmation. So where nobody can be 100% sure that the market is going this particular direction, but to some extent we can categorically say that the market certainly is coming to this level. So that's why we are targeting this level. And then our stop loss will be slightly here, at least slightly above the recent high. Our stop loss should always be slightly above this recent high. This is the highest level the market has gotten to before. So it is expected that the market should not come back here. If the market comes here and take us out, we agree to be wrong. So this is our entry point here, and this is our stop loss, and then this is our take profit. This way we are targeting for our take profit. I hope we are understanding. It's a very simple, it's a very simple strategy. I call it ACC. I call it ACC. A, I call it ACC. I call it ACC. Well, I wanted to draw it, but it seems it's not working out. So A stands for aggressive move, C stands for correctional move, and the second C stands for continuation move. So our interest is the continuation move. So we wait patiently. For you to become profitable in trading, it's not that whenever you see the market moving, you just enter. No, you have to be sure of what you are doing. And in this case, we have analyzed the market from daily, and we have seen that the market has broken our trend line on the daily time frame, retraced, and is aggressively going down. It has also formed the double top because this is the first top, this is the second top. I will teach us about this market what do you chart pattern. There's double top that is like this, equal double top. There's double top that is like this. The first leg is higher, is longer than the second leg, and there's another double top that is like this. The second leg is longer than the first leg. So I'm going to teach us on that, or I'll give you as an assignment. Go and look at the the basic chart pattern we have, the double top chart pattern. I think we have just three different double top chart pattern. Go and check it out. So, and then we went to 4-hour time frame to confirm whether the market is actually going down. And of course, we can see we have drawn our trend line from the 4 hour time frame, it is showing that the market is actually going down. And then we went to 1 hour time frame to still confirm, is this market still going down? And obviously we can see we have drawn another trend line on the 1 hour time frame, and it's showing that the market is going down. Then we go to 15 minutes time frame to look for entry, and you can see, like I said, this is the aggressive move we are targeting here. This is the correctional move, and our interest is the continuation move. So we place our entry here and target here, and then our stop loss should be here. Thank you so much, guys. Thank you for following me up. And my strategy is called ACC: aggressive move, correctional move, and continuation move. It's as simple. In fact, I've already taught my 7-year-old boy, and he understood it very well because it's a very simple and straightforward strategy. So please keep practicing, keep practicing, keep practicing, because practice make perfect. All right. So if today is your first time coming across my video, please kindly subscribe. This is the only way you can assist me so that YouTube can keep on recommending my videos to as many people that needed to see this as possible, as I keep on releasing, a very educative content like this. Thank you and God bless you. The strategies still remain simple. I call it ACC: aggressive move, correctional move, and then continuation move. Thank you and God bless you. Have a pleasant day ahead. Bye.